Why are accruals and prepayments so difficult? I'm not sure. Well, let's try and make these easier. Hey, it's Steve from YOUvolution Learning. If this is your first time here and you're an AAT student, why don't you hit subscribe and that notification button so you don't miss any of these useful revision videos. So, accruals and prepayments. Now this is traditionally a tricky area for students. Let's take a look at what the examiner actually said at the last examiner's report in June 2018. So you can see from the screen I've just put a little graph up there, and it just shows you the examiner's report, and it just breaks down each of the areas in which students can perform. So you've got exceeded, met, borderline, below requirement, and you've also got significantly below as well. Now, if you work out on the percentages, you can see that around about 50% of students pass this question, and 50% of students also don't pass this question, with a great deal in terms of exceeding, so 28%, but very close behind that, you've also got 26% who are below requirement as well. So why is this quite a tricky area for students? I'm not quite sure. It's something that I've thought about, I've tried to tackle with students I've delivered to in the classroom. There's always a mixture, as you can see from the exam results as well. There's students who will pass this and students who won't pass this. And trying to figure out why that might be, where the students struggle and why the students struggle. I'm looking into this. I think one of the areas I think it might be is that the way that they're presented in the exams doesn't really tie into how things are, you might see, how things are in the workplace. So in the workplace, pretty much all your suppliers are probably going to be credit suppliers. So that means they're going to appear on your creditors, your purchase ledger control account. But in the AAT, they generally only show the purchases for goods for resale in the purchase ledger control account. And I'll give you an example here. So as you can see here, we've got a few of the sort of companies that we normally see as expenses in the AAT exam. So you've got BT, that would represent by our telephone expense. You've got Eon, that would also represent our rates expenses. And you've also got Staples as well, who would represent our stationery expenses. But in the workplace, we're more likely to be purchasing from those on a credit basis. So therefore, they would appear in our purchase ledger control account and be treated as a liability. But in the AAT exams, you're more likely to see them like this. A sort of question that would say the cash book for the year showing payments for telephone expenses of £7,800, update the telephone expenses account. So then you'd do something like this. You'd do telephone expenses, we'd debit that, and then we'd credit the bank. But as we've just seen in the workplace, that wouldn't quite be the case. We wouldn't only be recording expenses at the point in which we pay them. And in terms of the concept that we're looking at here, the accruals concept is very much that in its nature. It says that we record transactions at the point that they happen, not necessarily when they're paid. So I think sometimes there might be a bit of a mixed message here, where we're recording the bank transactions when they happen, we're recording those straight through the expense account and straight through the bank. We're not showing those within the purchase ledger. So I think maybe that's one of those areas where it can be a little bit confusing between trying to relate to how the accruals concept works in the AAT exams and actually how it works in the workplace. So let's take a closer look at what the accruals concept is. Now, I'm not a big fan of accounting definitions. I think they generally come with a bit more explaining that's needed. So I'm going to give you the definition anyway, but I'll also put what I think that actually means and see whether that helps you with, again, breaking this down in terms of trying to apply that knowledge into your questions. So it says the accruals basis of accounting requires that transactions should be reflected in the financial statements for the period in which they occur. This means that the amount of income should be recognised as it is earned and expenses when they are incurred. This is not necessarily when cash is received. The way that I look at that is this. It's about recognising that time lag between sales and purchases, including expenses, on one hand, and the collection and payment and cash on the other. So when you look at it from that point of view, you can see that we've actually been using the accruals concept since level 2. Every time you've been recording a credit purchase and a sales purchase, you're actually applying the accruals concept in the way that I've reworded it here. We're recognising that time lag between sales and purchases. So when we raise an invoice, we're actually putting that onto our system. And the time difference between when we actually collect the cash. So those invoices for our customers and suppliers, they'll remain on our purchase ledger until they're paid. And that's kind of what the accruals concept is doing. And like I said, we've been using that since level 2. And I'll show you one here. So the accruals concept on level 2, then you can see that we would, if we're buying on credit, for example, we would debit purchases and then we would credit the purchase ledger control account. And the same for sales. When we're selling on credit as well, we would credit the income account, the sales account, and then we would debit the asset account, the sales ledger control account. And that's how we see it at level 2. But when we come to level 3, we see the same principle of debiting expenses and crediting liability for our purchases, and also debiting our asset, our sales ledger control account, and crediting our sales account. We see the same thing when we're dealing with accruals and prepayments at level 3. And I'll show you one here. So you can see the types of account, expenses and liability, and income and asset have remained the same. They haven't changed. It's just we're not using purchases or sales or purchase ledger control account or sales ledger control account. We're actually calling them expenses and accrued expenses, or we're calling them income and accrued income as well. So you can see how we've been doing it all along. It's just been given to us in a little bit of a different way. But the principle of what we're doing at level 2 is then the same as what we then start to do at level 3. We just use different terminology to apply the same knowledge. Okay, so let's delve a little bit more deeper then into accruals. And again, here comes an accounting definition. An accrued expense is an expense incurred during the accounting period, but not paid before the period end. Accrued income is income that has been earned, but has not yet been paid. So again, as accounting definition, you normally, especially when you're standing up teaching this, you normally have to give an alternative explanation. So this is the way I normally put it. It's missing from the accounts and it needs adding in. So we've got to the end of the year and something is missing. So for example, we've got to the end of December, our year end is December, and we haven't got that telephone bill. We've been using the telephone all the way through December, but we haven't recorded anything in the accounts because we haven't got that invoice in yet. So that's what accruals are doing. As it says there, it's missing from the accounts, it's missing from December, and we need to add it in. Another way to look at accruals, it begins with an A, so just see add. And if you've seen any of my videos before, you'll see that I work on accounts based on their account types, and we look at increase and decrease, so adding and taking out. So that's the accruals definition and broken down into hopefully a bit more of a simpler definition. It's missing from the accounts and we've got to add it in. So let's take a look at an example. You'll be familiar with the way that this looks if you're studying level 3. You've got a business policy at the beginning, which then is pretty generic anyway. It says an entry is made into the income or expense account and an opposite entry is into the relevant asset or liability account in the following period. This entry is reversed. So let's take a look at the information that we've got. It says you've been provided with the following information. Balances at the 1st of January 2019, we've got an accrual for wages of £670. And it says the bank summary for the year shows payments for wages expenses of £32,500. In January 2020, £520 was paid for wages expenses incurred in December 2019. So the task is prepare the wages account for the year ended December 2019, close this off showing a transfer to the statement of profit and loss. Now there's a few things in here that we need to really take a look at. We've been given information here and we need to figure out what that relates to. We've been told we have a bank summary of £32,500 and we've also been told that in January 2020 there was £520 that was paid that in January that relates to December. Okay, so let's take a look at what we do. The way that I normally try and tackle these is start with the information that you find really easy to do, and I normally find that that's this bank figure. So the way that we look at bank then, obviously if you're familiar with how the bank account works, we debit the banker's money in and we credit the banker's money out. So therefore, if in this case we've paid £32,500 out to our staff, so we're going to credit the bank, therefore we must be debiting wages expense. So you see on here what we do. We literally just debit wages expense with £32,500. Then, before I look at any reversal or that sort of transaction, I then look at the closing adjustment. Now you can see from this one, it says in January, so after the year end, we've paid that £520 that's missing from our accounts from December. So that £520 related to December, but it's missing. So as I resaid the definition before, it's missing from the account, so we need to add it in. So thinking back at the account type, we've got wages expense here, so it's an expense account. That's the type of account that it is. So an expense account is a debit account. Is a debit account, and every time we create a new expense, we have to debit that account. Every time we increase or add to an expense account, that's also going to be a debit. So you can see then, with this £520 that's missing from December, we need to add it into December's wages expense. So if we're adding to an expense account, that's going to be a debit, like so. And you'll notice as well, I've also done the opposite side of that double entry too. So we've debited wages expense with £520, that's that accrual because it's missing from the year end. And then we credit accrued expenses. Now it's a credit because it's a liability. So we're thinking about the year end accounts for December 2019. We're then saying that at the end of that year, there's something missing that we're going to have to pay later on. And the definition of a liability is it's something that we're going to pay in the future. So that's what's happening with this one. So we've credited accrued expenses. So then we can use what we've done at the end of the year, that closing adjustment, that closing accrual of expense, to work out then how we deal with the reversal. Now the reversal is this bit up at the top here. The reversal is that part there. It's saying that there's an accrual for wages. So we need to reverse that one in this year's accounts, because if that was an accrual last year, that means that we adjusted it into the accounts last year, we paid it this year, but it doesn't relate to this year, so we've got to take it out of the expenses account. So an accrual for wages or an accrual for expenses, if we're going to take that out, we're doing the opposite to what we do with a new accrual. So a new accrual, we add it in. With a reversal then, we're going to take it out. So it's just the opposite. So if a new accrual and adding in accrual at the end of the year is a debit, that means the reversal must be a credit because it's the opposite. But also if we look at the account type as well, it's a wages expense, which is an expense account. That is a debit account. So if we're reducing the expense account, that means we're going to do a credit. So for the reversal, then we just credit the wages expense account. So it's always going to be the opposite to what we're doing at the end of the year. And you can see I've done a double entry for that as well. So you can see we've credited the wages expense account with that reversal because we're taking it out of that account. And we've also then reduced that balance in the liability as well. So the liability is a credit account, which means if we're adding to that account, it's going to be a credit. But if we're going to do what we've done here, we're going to reversal, we're going to take something out of that account, it's therefore going to be a debit. So you can see how the double entries work there. But you can also see as well, by doing that reversal, we've dealt with that opening balance that we've got here as well. Okay, so let's go ahead and close this account off. We're going to put the two balances in. And then we need to work out what we do at the end. Now it tells us in the question that it wants us to close this off by doing a transfer to the statement of profit and loss. So that's what we do. Instead of doing balance carried down, we just do statement of profit and loss. So that's how we close the wages expense account off. So you can see how we've broken that question down into, we've started with something quite easy, using the bank figure. We've then dealt with the closing, because looking at that definition, when we're doing a closing accrual, we add into the account. Using our understanding of how expenses work, we know that an addition, an increase to that account is a debit. Then we've used that to help us to work out where the reversal goes. So we start off with the bank. We've used that definition of adding it in to work out the closing, where the closing goes, and then we've used that to help us to see what the opposite is, the reversal, and it goes on the opposite side. We then just finish off the question by closing that off and by the transfer to profit and loss. But I'm also going to quickly just do the accrued expenses as well. As you can see, we've balanced those off. And you can see the balance carried down then is that £520, that new closing accrual that we've added in to the liability account. Okay, so as part of the understanding for this area, they also want you to look at how the accounting equation is affected by doing things like accruals and prepayments. So just a reminder there on the screen, as you can see, that assets minus liabilities equals capital. Now at level 3, don't forget that capital includes profit and drawings. So in other words, it's capital plus profit less drawings. That's what goes into that capital figure. And that's going to help us with understanding how the accounting equation is affected when we do these accruals and prepayments. So I'm just going to give you a simple example there. Assets minus liabilities equal capital. We've got £10,000 minus £2,000 equals £8,000. Okay, so 10,000 assets, 2,000 liabilities equals 8,000 capital. Now, if you're wondering where those figures have come from, I've literally just made them up to try and do this example. So they've not come from anywhere that you might have missed. And I'm just using simple round figures as well to try and demonstrate the impact of what happens here. So let's have a look at how the accounting equation is effective. Well, you can see in the two accounts, we've got an expense account and we've got a liability account. So therefore, assets stay the same because there isn't any change in the assets at this point. But liabilities have increased. As we've seen, we've got a balance carried down of £520. That's an increase in that liability for this year. We've added a new liability to it. So you can see it's increased, and that's created a new liability of that accrued expense of £520. So then what's happened to capital? So capital has actually decreased. Now there's a couple of ways that you can look at this. If you did £10,000 minus 2,520, you would then see that capital has reduced just by doing that calculation. So you could literally just do that and use that to help you. But I'm a great believer in building on that understanding. So why has that decreased? So this is because the expenses for the year have increased. You can see we've added £520 into the expenses for the year. So because expenses have increased, therefore profit has decreased. And because profit has decreased, therefore capital is going to decrease as well. Just going back to what I put at the top here, you can see it's capital plus profit less drawings. So if that profit is actually decreasing, therefore the overall capital is going to decrease as well. And just to finish it off, you can see there, so £10,000 minus the 2,520, you can see the liabilities have increased. That means that the capital has then decreased. Okay, so another area then where you need to be familiar is what happens at the next financial period. So one of the things that the examiner says in their report is that students do struggle with that reversal side of it. You know, which side of the account does it go on? So you saw how we dealt with that at the beginning, just using information about the closing to then say, well, the reversal is the opposite. But again, let's build that understanding. So what happens then in the next financial year? So it was outstanding, that £520 was outstanding at the end of December. And in the question, it told us that in January, we paid that £520 that we owed out. So the first week of January, then we pay that £520. So therefore, we're going to credit the bank off with £520, that's money going out the bank, and then we'll debit the expenses. So it'll look a bit like this. We'll debit the expenses, £520. But we know that £520 that's now in the new year's wage expense account relates to last year. So we need to reverse that out because it's affecting the figures within this year's accounts. So now we can reverse that accrual that we made last year. Let's reverse it and reverse it through the expenses of accruals account as well. So you can see what's going on there and why are we doing that reversal. Because as you can see, it was in that bank figure for January, which is now in 2020, and we need to take it out of there because it relates to December 2019. And that's why we're doing that reversal. So let's take a look now at prepayments. Again, here's a definition. A prepaid expense is a payment made during the accounting period for an expense that relates to the following accounting period. Prepaid income is a payment received in advance of it being earned. And again, let's have a look at what I would say. We've paid more in this accounting period than we should have done. Let's take it out. Okay, so a prepayment means we've paid something more in this accounting period and it shouldn't be there, so we've got to take it out. Let's have a look at a similar sort of question we looked at before, but this time looking at prepayments. So the information is quite similar. You've got the business policy, you've got information about the start of the year, you've got information there about the bank figure, and you've also got additional information as well. So it says, the bank summary for the year shows payments of rent expenses for £19,440. In November 2019, £7,710 was paid for rent expense for the quarter ended January 2020. Prepare the rent expense account for the year ended December 2019. Close this off, showing the transfer to the statement of profit and loss, just like we did before. So again, just like we did before, Let's start with the easy figure, the bank figure. Okay, so we know we would have credited bank because it's money out, therefore we need to debit rent expense. And you can see that's gone through there. So let's take a look at the closing information then. So this tells us that in November 2019 we paid 7710 for rent expenses for the quarter ended January 2020. So you can see I've added a little timeline in here as well. So when you are doing these questions, make sure you use a timeline like this. So we've got November, December and January. Now our year end is here, it ends at December. But we've paid in November, we've paid for November, December and January. So that means that this area here is something that we've paid in this financial year, but it relates to next year. That's a prepayment. We've paid too much in this year, so we've got to take it out. So how much have we paid extra? So if we take 7710 and we divide that by those 3 months, by November, December and January, you'll find that we get £2,570 and £2,570 and then £2,570. So you can see then, that's a bit scruffy, isn't it? You can see then how much we've actually prepaid. So as I said before, the definition means we've paid too much in this year's account, so we've got to get it out there, we've got to take it out. So we look at an expense account. The account type expense, it's a debit account, so that means we increase on this side and then we decrease on this side. So that means that this 2570, if we're taking it out of the account, we're decreasing that account. So that means that it's going to go on the credit side. And you can see I've done a double entry for that as well. We've credited the expense account with 2570 because we're taking it out of there. So therefore, in the prepaid expenses account, we've then debited it. Now the prepaid expense account, as you can see, is an asset account. So because we're creating a new asset, that means it's going to go on the debit side of that asset account. And that just finishes off the double entry for that one. Okay, so then let's use the same sort of principle that we did before. If this year's prepaid expense needs to go on the credit side, that means when we do the reversal, which is just the opposite, it's going to have to go on the opposite side. And you can see there that we had the information here that told us about prepayment of rent at the beginning of the year. So that's what the reversal is. And that's why it's going to go on that debit side, because it's the opposite to what we did last year. We're going to take it out. So let's finish off the account that we did before, balance it off, and then finish it off by doing the transfer to the profit and loss. And then we just do the same with the asset account on the bottom here, prepaid expenses. We're just going to balance that off, and you can see the value then of that account matches the 2570 of the new asset that we've generated this year. So doing what we did before then, have a look at the effect on the accounting equation. You can see just a reminder of what the accounting equation is, and you can see there that we've got the same sort of figures, 10,000, 2,000 equals 8,000. So what's happened this time then? So this time you can see the assets have increased. You can see that we've increased the asset account with that new 2570. So we've created a new prepaid expense. So that's going to go up. Liabilities this time, as you can see, there isn't a liability account here, so that stays the same. So if we've now got £12,570 less £2,000, what's going to happen to that capital? It's going to go up, isn't it? Yep, it's going to go up. So the capital has increased. Now again, building on understanding, why has the capital increased? This is because we've taken money out of the expense account. That means we've decreased the expense account. That means that profit's going to go up. And then just to finish off, you can see it in the calculation. So when you are doing a question on the accounting equation, make sure you just use simple figures like this. You're going to use simple figures like this. It then makes them doing those adjustments really easy, and then you can just do something like I've done here. Do a little arrow that just says whether they're going up or down. And then when you come to tick those boxes to say, has assets increased or decreased or stayed the same and so on, you've got all that information there for you. Okay, let's follow that through then. What happens at the next financial period end? So in January, we use the building we're renting but don't make any physical payments for rent. Why? Well, because we paid January's rent in November, so obviously in January we're not going to make any of those payments. So therefore there's no double entry at that stage. But we have actually been in the building all of January, so we need to represent that in our accounts. And that's what we do. We do that via that reversal of the prepayment. Okay? So you can see we're going to reverse the prepayment out of the prepaid expense account, and then we're going to stick it into the rent expense account. So now the rent expense for January shows that £2,570 of rent that even though we paid in November, we've used it in January, so it's got to be in January's accounts. So hopefully accruals and prepayments are starting to make a bit more sense by refining those definitions to try and put them in their simplest terms, and then going through some of these examples and showing you some of the ways in which I would tackle these questions. Hopefully you're feeling a bit more comfortable now, a bit more confident in tackling these yourself. So in order to really prepare for the accruals and prepayments, these are the sort of things that you've got to make sure that you really do understand. So you've got to make sure that you understand those reversals of accruals and prepayments at the start of that financial year, looking at how we did that in the question. Making sure that you're okay with the correct dates. A reversal will always be at the beginning of the year, so the 1st of January, the 1st of April, whatever the year end is, it's always going to be the 1st of that new year. That's when we reverse those things out. You've also got to make sure that you're okay, not just okay, that you really understand how an accrual affects both income and expense, but also how a prepayment affects income and expense as well. Students spend a lot of time doing the expense side of things and little time on the income. And when you look at some of the publishers' books as well, they do a similar sort of thing. And I think it's because obviously income, when we're looking at income accounts and when we're looking at accruals and prepayments for income, they are literally just the opposite to what you're doing in expenses. But also, you've got to make sure you're spending the same amount of time on expenses and as income to make sure you fully understand that. And in the examiner's reports, it's one of the areas where the examiner did say that students do struggle is the income side of accruals and prepayments. So make sure that you are working on both of those. And you've also got to make sure you understand how accruals and prepayments are shown in the trial balance as well. So you can see how we've, in some of the examples that I gave there, we're looking at how things look in terms of the closing off the accounts and how the accounting equation is affected by these changes that we're making. So make sure you're okay with those as well. And then finish off, like I said, looking at that accounting equation, making sure that you are absolutely okay with that. And just using that little method I've shown you there, just writing out a simple accounting equation and just adapting as you go along. That's really going to help you to make sure you get those right. So one of the things that I like doing in these videos is building on the understanding, because I think that's what's really vital. Methods are great, methods are really good, but they should never replace the understanding, and they shouldn't just be relied upon. So building on understanding is vitally important. But methods help you to make the move from when you start to understand and build an understanding to then applying it. Those methods help you to apply it. And sometimes those methods, they help that understanding to click as well. So as ever, here is a method that I normally use. And hopefully you'll see this is quite a simple method, and it's one of those that if you do get to the exam and all of a sudden your brain just melts and you can't remember what you need to do, this method is going to help you make sure that you can tackle these questions no matter what, no matter how they're formatted, as T accounts, as sentence-based ones, it doesn't really matter. Doing this on your piece of paper is going to help you to make sure you get those questions right. So when I do this, I just draw the little T account out, and I start with one area, the area that I've always been most comfortable with. And the place I've been most comfortable with when it comes to accruals and prepayments is that closing accrual. Because it starts with an A and we need to add it. So it makes sense. So I need to add it to the account. So building on what I understand about expense accounts, an expense is a debit account. So if I want to add something to the debit account, it's going to go on the debit side. So I always start with the closing accrual, that accrual for the end of the year. And I just stick it in, accruals of expenses, that closing accrual. And then I use that then to work out pretty much everything else. So if the accrued expenses at the end of the year needs to go on the debit side, that must mean that accruals at the beginning of the year, the reversal, needs to go on the opposite side. And we've also established that accruals and prepayments are opposites. So an accrual is something that we add into the account, a prepayment is something that we take out of the account. So if a closing accrual is a debit, a prepaid expense must be a credit. And again, if the prepaid expense is a credit in expenses accounts, then reversal again is just the opposite. So you can see that by starting with that one at the bottom, that accrued expenses, I've then been able to work out where everything else goes. So that's a really good method to be able to use in the exam if things start to go wrong. Now you should be okay with how the bank works. That's something that you've been doing since level 2. Again, if you're not too sure, draw out the T account and just put debit and credit, money in, money out, and then you know how the bank figure should work in the other accounts as well. So the bank figure for an expense account would be we need to credit bank and therefore debit the expenses. And then we can use that then to help us to know where the transfer to the statement of profit and loss goes. The statement of profit and loss figure always goes opposite the bank figure. So you can see just opposite. So you can see using a method like that, we've literally been able to look at closing accruals, work out where all the rest of accruals and prepayments need to go, and then using bank to make sure we get the closing profit and loss on the right side as well. On the correct side, not the right side, on the correct side. Okay. So the same principle then applies to an income account. Everything is just the opposite. So this time an income account is a credit account. So if we're going to add something to that account, it's going to be a credit. So again, a closing accrual is we're adding to the account, so therefore it's going to be a credit. And obviously the open accrual, the reversal, is going to be the opposite to that. The closing prepayment is going to be the opposite to the closing accrual. And therefore the reversal of the prepayment is then going to be the opposite to the closing prepayment. So you can see again, we're just using that one to start with, doing the opposite, doing the opposite, doing the opposite. And again, income means that money's coming into the bank, so we debit the bank as money coming in, and then we credit the income account. And like we saw before, the statement of profit and loss figure is always the opposite to the bank. So there's my method. And with some of the stuff I've covered at the beginning of the video, if you've been able to bear with me on that and work through that, you then got the treat of this useful method as well. Build an understanding, have this method, and that should put you in a really good position to not just meet the requirements of this question, to exceed the requirements of this question in the exam. So that's my method. There are other methods out there as well. And if you are a member of the AAT's independent student group on Facebook, just search accruals and prepayments in there and you'll find there's lots of different methods in there as well. Lots of people suggesting what other people use and how they try and build on their knowledge using some of these methods. Okay, so some of the ones that I've come across that I've thought of really good as well. You've got Sarah Churcher here who does YouTube videos and Facebook videos similar to what I'm doing. And she's got a really good one on accruals and prepayments as well. And you've also got Jennifer Foster on Facebook. If you search for Jennifer Foster in the independent students group, you will find that she's put an awesome PDF explainer on accruals and prepayments. I've never seen it explained in this way, and I looked at that and went, if I was a student, I'd love that. That was fantastic. It's very visual, it's very easy to follow. So have a search for her as well and have a look at that PDF. I'm going to put the links for all these at the bottom, so you can obviously click on the link and you can go straight to these. But they are really good, and make sure if you are going to use theirs, make sure you give them a thanks as well, because they spend the time to put these together for us. And there's also a method that people use called FAPR. I don't use that one myself. It's not one I've found comfortable using. But again, that is there if you want to use it as well, and it's by a tutor called Accounting Lecture on YouTube. So you can search for FAPR on there, and she'll go through and explain how to use FAPR. Okay, and just to finish this accruals and prepayments, I just want to make a few points that make sure that you are taking these things on board and really doing yourself justice and being able to prepare really well for these sort of questions. Knowledge is absolutely vital. As I've said along, the methods are only as good if you've got the knowledge to back them up, because then they make those methods so much easier. And when things in the exams don't quite look the same or not quite put across in the same way, because you've built on that knowledge and you've got that method, they help. So make sure you build on the knowledge of understanding of accruals and prepayments. So methods can help, but they should not replace the knowledge at all. And practicing, like I was saying, applying both the knowledge and the methods will really boost your understanding in these questions. Use T accounts. I'm a massive fan of using T accounts because they just take the information you've got in your head, you stick it on a piece of paper, and you can see that it makes sense. And you can see I've used T accounts all the way through. And my method includes that T account as well. So don't be afraid to use T accounts. You've got time in these exams to do that sort of thing, to write the T accounts out and use them to check that you've got things right. And by doing that, you know, lots of students will drop marks because of daft things like putting something on the wrong side. Not because they don't understand, it's just because in the moment of the exam, they've not used a T account, they've put it straight into the question and they haven't got it the right way around. So use T accounts, they will really make sure that you don't make those daft errors. And I'm a great fan of this. I don't know if anyone watching has watched The Incredibles. You've got Edna Mode on there. Within that film, she came up with this classic quote that I love. Luck favours the prepared. And that is absolutely true for this exam. If you prepare well, you will be lucky. Because it's not about luck, it's about that preparation. And with that, then, the more prepared you are for these exams, the more success that you'll have in these exams. So luck does favour the prepared. So don't be shy, prepare properly, and you will be successful in these exams. Okay, so that brings us to the end of that video. I hope you've enjoyed it. If you have, stick us some comments in the bottom just to say if you have enjoyed it, if you haven't enjoyed it, what sort of methods do you use yourself? Have you found this useful? Are there any other methods as well that you think are really useful? Stick them in the comments, so then people watching these videos, they don't just have this one, they have others that they can fall back on as well. So, best of luck for your exams, well, best preparation for the exams, and I shall see you soon in the next one.